SoFi stock just absolutely crushed earnings once again, but it still seems like Wall Street just isn't going to let it out of the doghouse. And I know some of you guys are still bearish on the stock because I see it all over the comments section and the comments of my videos anytime I talk about SoFi. But we need to talk about a few things that are going to change your mind about SoFi stock. And especially if you're bearish or you're just unsure about SoFi, these may actually bring you to the other side and change your mind if you're willing to listen. And I'll give you my final thoughts on SoFi's earnings as well. So make sure you like the video if you like this style of content, so that way I know you guys are enjoying it out there. So I have 3 things that are going to change your mind about SoFi stock. So let's start right there with the very first one, which is the actual valuation of the stock itself. Now, guys, I hear all kinds of debate everywhere, not just in my group, not just in the comment section here on YouTube. It rages in other groups out there. I mean, it's just basically everywhere. People don't really understand or seem to actually agree on how to value a stock like SoFi. And the most common way that I see somebody tries to debate that the valuation on SoFi is way overvalued is because they will point to legacy banks and basically say, hey, if you apply the same multiple you apply to JP Morgan Chase, for example, that you would SoFi, there's no way you can justify SoFi at these prices. But there's a giant flaw in that argument because SoFi isn't a legacy bank. It doesn't fall under any of the regulations. It doesn't fall under any of the rules, anything in regards to the legacy banking system. They are clearly in the fintech category, which carries with itself a whole entire different multiple. So you're not really comparing apples to apples, even though on the surface, it kind of feels like you're comparing apples to apples. Basically, everything's different growth rates, all the way, everything is just completely different when you're talking about fintech and the opportunity in fintech versus a legacy bank. They couldn't be any more different in terms of a company, in terms of what they're allowed to do, what they're not allowed to do, and everything else. It's just kind of silly to argue that point at all. It's kind of like the folks that want to argue, Tesla should trade at the same or close to the same multiple as legacy auto. It's just stupid. I see it all the time, but it's kind of like, yeah, I'll be interested in Tesla whenever they get to a 5 PE like, GM is, or like, Volkswagen is, or whatever the case is. You're kind of like, oh, okay, yeah, I guess if you do apply a 5 PE, or if you want to pay a premium because Tesla's, has a better balance sheet, no debt, virtually no debt, growth rates that just crush anything that, legacy auto is doing. You got some folks out there still saying, oh, well, maybe I'd give it a 7 or an 8 PE, something like that. It's just silly at this stage. You're not comparing apples to apples. And to me, actually, Tesla argument, arguing Tesla's multiple should be similar to legacy auto is actually more applicable than what I see over there with banking in terms of trying to apply legacy bank multiple to SoFi. It's just silly because those are actually 2 completely different entities. At least you can say with Tesla, in regards to the cars, they fall underneath the same regulations, the same everything else in regards to the company themselves. So if you're one of those folks that thinks you should value it at a 5 PE for Tesla, okay, then I guess you're never going to come around to SoFi. You're just always going to apply those legacy bank multiples to it. But if you're willing to actually look at what they do, what their product is, what the regulation is, all the things that are actually included in actual due diligence on a stock, you would actually see that SoFi is something very, very different altogether. And although I agree, it shouldn't get a PE like Nvidia should whenever it turns profitability. I agree completely there. It maybe shouldn't even get one like Amazon gets up. So I'm not trying to say that it should get, 100 PE or whatever the case is. Some of the crazy numbers that get out there for a lot of folks who are very bullish on all kinds of stocks absolutely shouldn't do that either. But to just blanketly say it should have the same exact multiple as a bank stock, for example, legacy bank stock, for example, that pays a dividend, has, virtually no growth compared to SoFi's growth, and a bunch of other things like, oh, and more importantly, one is legacy banking, one is fintech, which are different product categories. To me, at that stage, if you aren't willing to put in that level of work, you're probably not going to have a deep understanding anyways, and not even understand what you really own. So I don't know. Take it for what it's worth, guys. But when you're listening to folks who aren't even willing to do that level of due diligence, you probably shouldn't be listening to those folks. The second thing that should change your mind is that nobody in fintech is executing as well as SoFi is right now. Look, guys, I love PayPal. I think it's an incredible opportunity, but I can't say that SoFi hasn't blown it out of the water in terms of performance, in terms of everything overall over the past year plus now. SoFi has just absolutely been performing better than everybody else. Don't even talk to me about Square. They've absolutely struggled the past year. There's no doubt about it. Nobody has executed better than SoFi in the fintech space over the course of the past year or so. Capital allocation, efficiencies within the business, customer growth, revenue growth, consistently upgrading your guidance. Oh, it feels like every quarter. It's probably every other quarter. Feels like every quarter. Oh, and then by the way, blowing those expectations out of the water the very next quarter after you give that guidance. That is how high of a level SoFi has been executing for over a year now. So to me, Nobody is executing as well as SoFi is in fintech. As a matter of fact, it's not even really close. So, although I understand some of the bearish arguments for SoFi, I understand it's not profitable yet like PayPal is. I agree there completely. It's obviously coming next quarter, guys. So you got to kind of understand that. But for me, if you're wanting to buy the company that is executing the best out of the fintech space for over a year now, it absolutely gets no better than SoFi. All right, let's get to the third reason here, and then we'll jump over into my thoughts on earnings. So the third one is when they turn profitable and maintain it, more importantly, you're going to kick yourself for not loading up. Look, this has been kind of an extended and weird period of time where Wall Street honestly doesn't care whether you're executing or not, doesn't care how you're doing as a business if you're unprofitable. They just don't care. Now, back in 2021, it was the opposite. They were willing to look at companies that were performing, and if you're performing great, but not profitable yet, they were more than happy to reward you for that. But for 2022 and 2023, and we'll see what 2024 happens, but at least for the past 2 years, it hasn't mattered. Unprofitable, you're getting beat down regardless of what you do, and you just basically have turned into a trader stock for more than a year now. All it is, they just run it up and then dump it, run it up and dump it. And that's what traders do, especially on smaller cap companies like SoFi that are not profitable because they know they are firmly in control of that stock. They can do whatever they want to it. This is how it works in normal markets with unprofitable companies like SoFi. The traders control the stock. But that also means we've been given more than a year now, and I have the buy alerts to prove it, where you could buy SoFi in the fours, fives, even the sixes, and I don't have a lot of buys in the sixes. Actually, I bought in the sixes like, I don't know, a week or so, right before earnings there. It went all the way back down to the sixes again, and I happily pulled the trigger once again on more shares of SoFi. So basically, you've had more than a year now to build out an incredible position in SoFi where they have performed, and all you got to do is be patient with the traders. Understand the game. Understand that when a stock is controlled by traders, they're going to run it up and then beat it back down and run it up and beat it back down. And all you got to do is be patient and wait. Now, I didn't know it was going all the way down to 4 or anything else like that. All I knew is, hey, stock goes on a run, great. I'm going to take a breather, focus my attention on other stocks. And then inevitably, they have a great earnings. And then Wall Street beats it down again, kind of rinse and repeat there. So I was able to repeatedly add in the fours and the fives for more than a year now. And we might get a little bit more time. We just got it a week or so ago to add again in those $4, $5, $6 range. And we may get one more opportunity. We may not. Again, nobody knows what's going to happen in the short term. But when that switch flips over to profitability and Wall Street decides, hey, all of a sudden now they're interested in the stock. All of a sudden you got larger institutional investors now coming in wanting to buy the stock, and those guys aren't going to trade it up and down. They're not interested in pump and dumping or anything else like that. When that money right there starts to come in, you're going to be very, very upset if you didn't take advantage of the last year plus to add to this stock at those incredible prices. Trust me, you're going to be very glad Wall Street didn't reward great earnings and just continued to beat it down to oblivion like they were doing basically every other stock at that stage. You're going to be very glad they did that because your share count and your average is going to be very, very low. One of the beauties of a time like that is SoFi kind of get lumps in with all the other companies that were not performing. So if SoFi wasn't performing, I agree completely. I wouldn't be putting my money there. There was plenty of YouTube favorite stocks out there that you shouldn't have been putting your money in. They struggled over the past year. That's why they were beaten down. And basically SoFi kind of got treated and disregarded just like those stocks were. But the biggest difference between those stocks and SoFi is SoFi was actually performing underneath. So when they turn profitable and Wall Street finally kind of turns the switch and actually takes a look at the stock itself, you're going to realize that the bear thesis that's been around this stock for more than a year now is going to completely fall apart. And when it does, it's going to really invite some big money coming in here. Now, I'm not talking about it's not going to $100 next year or anything crazy like that. Please don't take it that way at all. But my point is, you're going to be very glad that you added shares during that time. All right, so let's discuss their earnings next because once again, it's one of those earnings calls where you just know and you understand, wow, this management team really has it all together. They are clicking on all cylinders and they are more than ready to turn that profitability knob and really, really go after some much larger goals. Again, I don't know what else to say about the numbers. Go look them up. There's no reason to even rehash them right here. They were all great across the board. I didn't find anything in there that I didn't really like, that I didn't really see. And more importantly, they continued to raise guidance and tell you profitability is coming next quarter. And we're going to hold that profitability all the way through the following year, meaning that's where that focus is. That's what that management team is focused on. And there's no reason not to believe them. They went from basically student loan company, that right there being the main driver of revenue, the main driver of profits, and basically kind of being based on that. And then all of a sudden, we had the shutdown, everything else happened. All of a sudden, student loan payments are on pause. and they completely transform the business. So if they can completely transform the business into something completely different than what they were 2 years ago, there's no reason for me not to believe that now they can not only, they've been tracking towards profitability, as they've said quarter after quarter after quarter. No reason for me not to think they're going to do exactly like they've executed to for the past year. And more importantly, execute to exactly what they want to do next year. That sort of consistent in and out performance, quarter in, quarter out from a company like SoFi is absolutely going to attract the attention of Wall Street folks. And so for me, this was just another, I don't know, 4, 5, 6, 7, 8 earnings calls in a row where they have just crushed it and knocked it completely out of the park. And so I'm very, very happy with these earnings. Like I said, there's nothing negative about it. This is kind of, I don't know, it was almost like the final shot. Like if you don't get it by now, you're not going to get it overall in general. And you're going to be one of those folks, man, where did SoFi come from? I can't believe that stock is performing like this. Well, you weren't paying attention at all, my friend, if you think that, because you missed it the previous, year or so ago. So Wall Street wants to get dumb again and give us one more quarter of beatdowns in SoFi stock. I'm going to happily continue to add to that stock. And if you want to watch me and know exactly when I add to that stock in real time, and you want to see my watch list complete with price targets, you want to discuss these earnings with me on our live Q&As or whenever we go live with earnings or whatever we choose to do, make sure you check out the pinned comment down there and take advantage of a membership where you get 5 courses for free. You get to use our stock analyzer tool for free. We got so much information in the best 6, 7, and 8 figure Discord out there. There's just so much, guys. Check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.